Assalamualaikum warahmatullahi wabarakatuh. Our group will present about Islamic finance in Malaysia. So, my name is Arisya binti KUDDUS and I will present the introduction for Islamic finance. So, I will proceed with the introduction of Islamic finance. Islamic finance refers to the means by which corporation in Muslim world, including bank and other lending institutions, raise in capital in accordance with Sharia and law. It is also referred to the type of investment that are allowable under this form of law. A unique form of socially responsible investment. Islam make no division between the spiritual and the secular. Hence, it reach into the domain of financial matters. Because this is sub-branch of finance in a burgeoning field, in this article, we will offer an overview to serve as the basis of knowledge for further study. Conventional finance include element interest and also risk. Development in Islamic finance have taken place to allow Muslims to invest saving and raise finance in a way which does not compromise their religion. According to Bank Negara Malaysia, the number of Islamic bank branches in Malaysia increased from 126 in 2004 to 766 in 2005. The development has taken place in all segments of Islamic financial system in Malaysia, including the Islamic banking and takaful industry, and also in the Islamic money and capital market. In conjunction with this, there are now a large number of diverse players and institutions in the Islamic financial system in Malaysia.
Assalamualaikum and hi everyone. I'm NABILAH. Will share to you about the development of Islamic finance in Malaysia. Basically, Malaysia has 4 stages of Islamic finance development. The first stage is when we can see instituting foundation had been established and legislative had been formulated and passed to govern the operation. Bank Islam Malaysia Berhad and Takaful Malaysia Berhad are the first company of Islamic banking and takaful that being operated currently in Malaysia. Next stage is where legislative amendments being allowed to operate in commercial banks as well as the expansion of services and their products. The third stage is where we can see Islamic financial framework had been synchronized to international standards, where domestic Islamic finance liberalized to allow foreign players and Islamic subsidiaries. Islamic Finance Standard Board also being established as international prudential standard setting body. Last stage is where we can see Islamic Finance Service Act 2013 had repealed Islamic Banking Act 1983 and Takaful Act 1984. There are few core foundations for development of Islamic finance in Malaysia. Few bases that I want to highlight here are the development of Islamic finance are to strengthen further accounting, auditing, and disclosure standards. Development of Islamic finance also portrays strong financial safety nets and having credible credit rating institution and process. Next, I want to share about the growth of Islamic banking and finance. There are 16 full-fledged Islamic banking currently operating in Malaysia, such as Alliance Islamic Banking and Islamic Banking. They offer Islamic banking and financial products, retail and commercial, such as mudarabah and musyarakah. As we can see in the graph, as more people are aware of their services, their total assets are increasing. Takaful. Takaful is adopting the risk-sharing concept. Few takaful companies that are currently being operated in Malaysia, such as Ahmed Life Takaful Berhad and Etika Takaful Berhad. The effective risk management by this takaful company in their products had increased the total assets of takaful company. And lastly, I want to share about the Islamic securities. Islamic securities in Malaysia is based on Sharia principles that prohibit excessive leverage and speculative financial activities. Few Islamic securities that being provided in Malaysia is including sukuk, fund and private equity. That's all from me. Thank you.
Assalamualaikum. My name is NURUL and I will going to present about the concept in Islamic finance. Islamic finance is finance activity that complies with Sharia and its practical application through development of Islamic economy. So the first concept is prohibiting the riba, that also known as interest. In a riba-based transaction, the owner of the wealth get return without making any effort and bears no risk. The person receiving the loan, on the other hand, assume all the risk and bears the responsibility of returning to the lender both the capital and the riba, no matter what the outcome of the economic activity. From the Islamic point of view, in a riba-based transaction, the lender used misfortune of the borrower in order to acquire wealth, which is unfair. Next concept for Islamic finance is avoiding gambling. In Islam, both the acquisition of wealth by chance and game of chance are prohibited because they are based on uncertainty. The Islamic prohibition against transactions that involve gambling prevent Muslims from purchasing conventional insurance product because conventional insurance is a gamble, and the outcome, whether the buyer ends up using the policy or not, it's unfair. If a policy holder makes small payment and then receive a large sum because a misfortune occurs, this is also unfair. If she makes small payment but never receive anything in exchange for them, that is unfair too. Instead, Islam insurance, called takaful, is based on a very different model of risk management that involves share risk and mutual responsibility. Lastly, avoiding investment in prohibited industry is also the concept of Islamic finance. Islam prohibits industry that it considers harmful to society and a threat to social responsibility. These industries include alcohol, pork, tobacco, and illegal drugs. By prohibiting certain industries, Islam also prohibits profiting from them in any way. Therefore, an Islamic financial institution cannot finance a project or asset that is prohibited, and a Muslim investor cannot put money into a mutual fund or other equity product that funnels money to a company that participates in a prohibited industry.
Hi, I'm NABILAH. Okay, the challenges in the Islamic finance is the first one, human capital issues. Its highly dedicated and qualified human resources undoubtedly play a vital role for the development and success in any organization. In this regard, the Islamic financial industry requires a specific set of competencies and skills, such as Sharia understanding and market insights. The research carried out by the Capital Market Regulator Forum found that 82% of the country which responds experience scarcity of talents in the Islamic financial services such as Sharia and takaful. The study also revealed that another 60% of Islamic finance professionals require further training and skill development. The shortage of talents in the Islamic finance poses a significant impact on the industry as it will affect the growth of Islamic finance. At the expert level, there is significant shortage of qualified Sharia scholars equipped with necessary knowledge and experience in the field of Islamic finance. Okay, for the second challenge is standardization and harmonization. Given the nature of Islamic law, which accommodates for different interpretation, Islamic finance is subject to different interpretation, which lead to different practice and use of concept across jurisdiction. This may impede the growth and
internationalization of Islamic finance since certain products may be accepted. This may impede the growth and internationalization of Islamic finance since certain products may be not accepted in some jurisdictions but not in the others. Therefore, there is a call for harmonization, standardization and mutual recognition of Sharia views so that legal uncertainty and the degree of the Sharia non-compliant risk may be mitigated. Okay, for the third challenge is public awareness. The low penetration rate of Islamic finance industry in certain jurisdictions is mainly due to the lack of public awareness and perception toward Islamic financial products and services. The research conducted by the Bursa Malaysia in 2009, for example, revealed that the main obstacles in developing Islamic stock market in Malaysia are the lack of awareness of potential investors. Meanwhile, a survey carried out by the PwC in 2014 revealed that lack of awareness is the key for the low penetration level of Islamic banking in the GCC. The survey found that over half of respondents believe that they are familiar with the Islamic banking, while 64% of non-Muslim respondents cite lack of awareness as the main reason of not subscribing for Islamic financial products and services.
For the next challenges is, Islamic finance market may be slower to react to market demand and changes. They may lack sufficient flexibility in their product offering when compared to conventional financial institutions. However, costs related to developing new financial products may be also higher for Islamic financial market. This is because the product have to comply with normal financial law and Sharia rules. Last but not least, financial products need to go through stages of compliance before they are approved. The pace of innovation of new Islamic financial product may be considerably slower than conventional product.